Good morning. This is Larry McMillan with a stock market update on Monday, January 5th. So, welcome to the new year. Hope you had a happy New Year celebration. The market is still trying to prove that it's in an uptrend. It did make a new all-time high, of course, right before Christmas, but then fell back from there. So, that had all the earmarks of a potential, failed upside breakout. We'll see how that works out. Today, the market's up. So maybe, it will just overcome what proved to be some year-end tax loss selling. It appeared to be nothing perhaps too important as far as market internals go, but it still knocked the market down a little bit. So right now there's support at 68.40. That was the gap on the S&P chart. It was filled, and we've moved higher, so that is still a support area. Below that, there's important support at 67.20, which is the December low. If we trade below the December low in the first quarter of the next year, that's often the sign that we're going into a bear market. So that's an important level to watch. The all-time high is at 69.45. That's resistance right now. The equity-only put-call ratios have been moving higher over the past week. There was plenty of put buying to go along with the tax loss selling, and so the equity-only put-call ratios are on sell signals right now. Breadth continues to be I would say, a flighty indicator. It oscillates quickly between buy and sell signals. It looked like we might get a sell signal, but now that's become a split indicator. The New York Stock Exchange breadth oscillator is on a sell signal, but the stock's only breadth oscillator's returning to a buy signal. So really not getting much in way of market direction or prediction from breadth. New highs have continued to outnumber new lows except for one day recently. So this indicator remains in a bullish state. What's really been quite bullish is the volatility complex. VIX is low, and while that's an overbought condition, it's not a sell signal. It only becomes a problem if VIX starts to rise sharply. VIX was up about 1 point last week, not a big deal. And so what we call the trend of VIX buy signal for stocks is still in place right now. Also, the construct of volatility derivatives, which is the term structure of the VIX futures and the CBOE volatility indices, that's all quite bullish for stocks as well. So all those things are working in the favor of the market. The seasonally bullish period that begins with Thanksgiving and runs through the second trading day of the year ends today. That ends with today's close. And then there's a slightly negative seasonal pattern coming up in about a week. But by the end of January, there's another seasonally bullish pattern. So the seasonality really didn't work out all that well from Thanksgiving. I think we're up just slightly since then, so it wasn't a wonderful seasonal period. The Santa Claus rally period is trying to finish on the positive note with the rally today, and if that's the case, then there's no further bearish implication from the Santa Claus rally period either. So all in all, we're still waiting to see the upside breakout confirmed. It would take a 2-day close at new all-time highs above 69.45 in order to do that. We might be getting that fairly soon. We'll have to see. And meanwhile, if you're interested in keeping up with these things on a daily basis, I suggest you visit our website. We're still running some year-end specials on our newsletters, and so you'll find the prices to be pretty attractive there right now. So thanks for watching, and have a great week trading.